Hi, I'm Bernard Leong, and you may know me as the executive who focus on drone cargo delivery in China. But in my spare time, I want to understand why Meituan Dianping is poised for a major IPO in Hong Kong, and you're listening to Analyse Asia, the weekly podcast dedicated to business, technology, and media in Asia. And today, I have Liza Lin, reporter from Wall Street Journal in China, in my new studio and hot seat. Welcome, Lisa, and it's great to have you back again.
Hi, Bernard. It's good to be back. Thanks for having me.
Well, since our last conversation, what have you been up to?
Well, there's a lot happening in the internet space. So the last conversation was more than a year ago. So, the internet landscape in China has shifted so quickly. There are new players. It's not just Baidu, Alibaba, and Tencent anymore. Nowadays, you hear about companies like Toutiao, Meituan, Dianping, Didi, and these up-and-coming, basically, technology apps. So I've been really looking into the money flows and what's happening in the competitive landscape in China's internet space.
And there are a couple of IPOs that are going to be very exciting, and one of them is the Xiaomi IPO, right?
Yes, indeed. Every time I look at news reports on Xiaomi, I feel like their valuation has been falling or proposed valuation has been dropping. So we'll see, but that will be an exciting one.
In the last year that you look at the China internet space, is it mainly focused on the smart retail, the things that are happening between Alibaba and Tencent?
Well, that's been part of my coverage, but for the last year, a lot has also happened in other areas beyond software. I would say artificial intelligence has been a big part of my coverage. So not just Alibaba and Tencent. I've done a lot of stuff on facial recognition and how China is using facial recognition in surveillance spaces. So that's been a bulk of my coverage. And also, regulation changes. The current administration under Xi Jinping has been getting very tight and strict on content. So how has regulation changed on that, on data privacy, on data flows cross-border? So it's been a very exciting space, not just on the Alibaba Tencent side, but, on the entire China internet and software technology landscape.
I bet you don't have the problem as Google would be, because by just selling the face recognition software to the military, Google is already having a lot of pushback. I don't think Chinese companies have that kind of problem.
They definitely don't. I mean, a lot of the face recognition companies count the government as like a key customer at this point, because there's just quite a lot of demand from the Chinese government on wanting to know more, or there's definitely a lot of demand from the Chinese government for using such technologies to govern.
So I've gotten you here because I think there's a major IPO that's coming in Hong Kong and is on one of the TMD, Toutiao, Meituan, Dianping, and Didi. And we're talking about Meituan Dianping, which they call themselves the Amazon of services in China. My first question to ask you is, can you briefly describe the company Meituan Dianping and why it is given the status of TMD in a Chinese technology world, meaning how important are them in terms of being the second wave of internet giants in China?
Sure. So Meituan Dianping, from, how in the past we always used to describe a Chinese company as being China's like Amazon or China's Facebook or China's Twitter. Well, in this case, Meituan Dianping really kind of defies that easy comparison. There's nothing very much similar in the US I could use to say that Meituan Dianping is China's blah, blah, blah. Meituan Dianping, actually, it's a combination of a couple of services that you could find in the US, but they do it all through one app. They see themselves as almost a platform, a one-stop super platform for all sorts of consumer and lifestyle services. So think about Yelp, reviews that you use Yelp for restaurant reviews, merchant reviews. One of Meituan's services is to provide real user restaurant reviews, store reviews, merchant reviews, anything from a hot pot restaurant down the street to a yoga studio down on your next block. And another, they have many other business units too. It's not just the reviews. So they have something similar to Grubhub and Seamless. It's like food delivery services, food delivered right to your doorstep, all using that same app. They also make money from selling vouchers the way Groupon in the US would do. And if you think about Kayak or a Priceline or a Ctrip, for example, Meituan also has hotel and travel bookings. I would say it's like a supermarket for all sorts of consumer lifestyle services that you need, except that it's online and it's using one app.
And they recently got into ride-hailing services as well, if I didn't recall wrongly.
That's right.
The question I really want to ask, because you live in China, how does a typical Chinese consumer access Meituan Dianping? And you talk about some of the products and services they provide. How do these services that are commonly used, can you describe some of these services that are commonly used by users of Meituan Dianping?
Yeah, sure. So Meituan Dianping they currently have two apps. One is Meituan, one is Dianping. And I think the bulk, this happened because it's more of a legacy effect. In 2015, Meituan bought over and somehow merged with Dianping. And that's why they have two apps. But most Chinese consumers log on to the platform using that app, either Meituan or Dianping. How would I describe it? You would see on your cell phone screen several options. So the options you would see would be food delivery, or let's search for nearby restaurants, or let's search for nearby fitness places, or a ride-hailing tab that you could click as well. So that's how most consumers get on the app and use the app. And I realized I didn't answer your earlier question about the TMDs. So maybe I can quickly just kind of run you through it now. So the TMDs are basically seen as, it's an acronym basically coined for the next set of up-and-coming technology giants in China. And they refer to Toutiao, which is a mobile content company. So Toutiao owns a few of China's most popular content apps. Take, for example, they own Douyin. Douyin is a video streaming platform that has become a big hit in China. Maybe to back up a bit, Toutiao's parent company owns these apps, and they're commonly known as Toutiao in China because of the very first app they pushed out, which is Jingri Toutiao. Today's, or translated to today's headlines, which is a news aggregator that uses an AI algorithm to push you content that it thinks that you would like to read. So Jingri Toutiao, if you logged on to that app, would push you content based on your reading history. So for example, if I liked to read about a certain celebrity in China, they would remember that and they would keep pushing me similar stories about celebrities in China or celebrities in Hong Kong, or very, very similar topics. They use computer algorithms to predict what you might like to read and keep pushing you out that content. So it's actually become very sticky in China, especially in the smaller tier cities, or the smaller second, third tier cities. And then, TMD is an acronym, right? So M would refer to Meituan, which is the company we're talking about today. And then D would refer to Didi, which is a ride-hailing giant valued at $55 billion at its last fundraising.
I think it was interesting to talk about Toutiao. Their parent company is called ByteDance, and I think Toutiao, Douyin is all under ByteDance, and they use a lot of artificial intelligence. And I think the founder's name is called Zhang Yiming.
That's right. Yeah, that's the one. So people tend to refer to ByteDance as Toutiao when you just kind of casually reference it in China. But you're right, Bernard. It's the parent company is called ByteDance.
What's the current revenue of Meituan Dianping? And as far as I understand from your reporting, they are not profitable, but they're really running at a loss before their upcoming IPO in Hong Kong that's valuing them at $60 billion, right?
That's right. I mean, it's unsurprising that they're running at a loss because right now China's internet landscape is very, very competitive. Your pool of internet users, especially in the big cities where a lot of these apps compete, that's not growing at the exponential speeds that we saw maybe 5 years ago, 6 years ago. So right now, in order to attract and retain users, a lot of these internet companies, especially consumer-facing ones, tend to resort to subsidies. And in this case, Meituan, which is in the food delivery space and the ride-hailing space, they're up against two very, I would say, deep-pocketed rivals. So in the food delivery space, Meituan is facing up against one of Alibaba's units, Ele.me. And in order to, I guess, maintain and grow their market share, both Ele.me and Meituan have given consumers pretty decent subsidies to be using their app. So if you think about how Chinese tech companies compete, it's not about differentiating their services as much, but one of the fastest ways for them to grow their user base and to grow their market share is obviously subsidies. So by subsidizing the consumer maybe 10% of his order or 20% of his total trip fare, you could very easily get a lot of Chinese consumers on your side, especially because Chinese consumers are well known to do a lot of price comparisons and to be a little bit more attuned to the price differences.
So I remember in the early days when Meituan Dianping talked about the IPO, they always wanted to do in the US, in the New York Stock Exchange. So why did they switch to Hong Kong now? Is it because that Hong Kong is starting to allow dual class shares, and also because of the current trade war that is going on between China and the US? So it may be safer to actually list in Hong Kong instead.
So I can't really speak for Meituan Dianping's management on what the decision was, but it does seem to be that Hong Kong's change in regulation to allow dual class shares has been a big factor in attracting a lot of tech companies, not just Meituan, but Xiaomi included, to list over there. If you really think about the number of technology companies that are listed in Hong Kong, beyond Tencent and maybe the recent, China Literature and a couple of other, more smaller tech companies, you don't really see a big tech company actually listed in Hong Kong. So I suspect that might have played into their decision, less of the trade war, because I almost feel like the trade war hasn't really affected money flows between the retail investors.
I actually have met Wang Xing in person before he became so famous as the CEO of Meituan Dianping. Can you talk about him? And he has a history actually in building Renren, which was originally known as the Facebook of China, and Fanfo, which is the first generation of Twitter clones that got shut down before Sina Weibo came out.
Yeah, sure. So in the course of my reporting, we sat down with Wang Xing in his Beijing headquarters for 2 hours. And, we pressed him on all sorts of topics, all the way from how do you decide which areas you want to expand into, which local services you want to go into, all the way from that to a subsidy wall with Didi, to international expansion, and even to his meeting with Apple's Tim Cook. So when Tim Cook was here last December, he actually had dumplings with Wang Xing in the Shanghainese restaurant. Wang Xing and his team were showing Tim Cook how to scan a QR code on the table of the restaurant, place your order, and just pay everything just through your mobile phone. So that was actually one of the topics that we spoke about. So a little bit about Wang Xing. Wang Xing is a relatively young entrepreneur. He's 39. He graduated from Tsinghua University in Beijing with a degree in radio technology and information systems. He's pretty fluent in English. So after his Tsinghua University degree, he went to the University of Delaware to start a PhD program. However, halfway, he decided that that wasn't the path he wanted to take. So he dropped out to become an entrepreneur. His first startup was a social media knockoff of Facebook, which he eventually sold to a local competitor. And then later he tried again with Fanfo, which is kind of the Chinese version of Twitter. However, that business was unfortunately shut down by the Chinese government in 2009 following some unrest in the Xinjiang region, which the state media blamed on social media. Yeah, so he is, I would say a serial entrepreneur. I would almost describe him as like third time lucky, just because this is his third venture, and third time he got very lucky. Because now Meituan Dianping is worth, at its last fundraising, $30 billion. So it's a decently huge company, of which is one of China's top 3 largest tech startups.
And he's a very nice person, because I actually just approached him by cold calling him when I was thinking about moving to Beijing. But one of the things I really walked out after the conversation, and it's still etched in my mind, is that he always made this comment: there's no chance any US company coming into China and succeed, because they will fail. He was very confident that any US company would be crushed in China. I think that was the thing that I walked out talking to him. And I think that was in 2008.
Wow.
He's probably right in 90% of them.
Why did he say that?
No, we were just talking about the US internet companies and Chinese internet companies, because at that point in time, I was just thinking whether I should move to Beijing. And he was saying that if you want to stay in Beijing, you should just think Chinese, be Chinese, and really focus on building the startup on China for China. And when I asked him about what he thinks about the internet startups from the US, he said that there's no chance for these companies. And he said it so forcefully that it keeps edging on my mind. No chance is the word that right. He's a interesting person. I thought I'm so glad to have that 20 minutes time with him over at the Tsinghua Starbucks Cafe. But that's where all the Chinese entrepreneurs used to hang out in Zhouguancun.
Yeah, I mean, I was actually very impressed when I met with Wang Xing in person. He's very focused. Whenever you ask him, why did you expand into a certain area, or why did you decide to start this company, he has a logical flow of thought to kind of explain it. So if you asked him why he expanded into ride hailing or why did he decide food delivery, it's never like an impulse that he suddenly wanted to do it. He has good reasoning and good logic behind most of his moves, because I think a lot of people would not have expected Meituan to go into ride hailing, but yet he had the gut to do it. So it's quite interesting. Yeah. And he was telling me how in his spare time, he likes to read, and sometimes he likes to look at maps as well. So he would compare historical maps with current day maps to see how things have changed. It was I left definitely impressed.
What is interesting to me also is that Meituan Dianping has a history with both Alibaba and Tencent. I think it was first invested by the former and then they switched sides to be with Tencent. What has Alibaba done to start competing with them? And why did they ally with Tencent later then?
Yeah, I guess it would be the colorful part of Meituan Dianping's history. Alibaba decided to form a unit called Koubei, which is actually very similar to the review site or the review side of the service that Meituan Dianping has. So Koubei is a service that it has a homepage very similar to Meituan Dianping, in which you could search out merchants in the area that you're located in. So you could find restaurants, you can find yoga studios, you can find plumbers, you could find tuition teachers, tattoo places, all through Koubei. And just very similarly, you could find the same thing through Meituan. And on the back end, they also, one thing in common is they also provide very similar services to businesses as Meituan does. So Meituan provides some part of their revenue actually comes from selling services to merchants. For example, helping merchants digitize the back end of their operations, selling them equipment that they use to digitize their operation, like point of sale terminals to take digital payments, for example. That's one of it. And Koubei's goal was also quite similar, to help empower these merchants through loans or helping them go digital. So that was already one salvo. The second hit, I guess, that Alibaba tried was they started backing a food delivery startup that was in direct competition with Meituan. And this was Ele.me. And sometime this year, Alibaba decided to acquire Ele.me fully. So right now, Alibaba has gone from being an investor in Meituan to actually a competitor with Meituan. And somewhat famously, Alibaba actually sold off most of its initial stake in Meituan. And this was a couple of years ago.
Then why did they go with Tencent then? Because the enemy of my enemy is my friend?
I don't know. You really have to ask Wang Xing that, but I don't think it's a bad idea. I mean, in China's internet and startup space now, if you had to be allied with a company, you would choose either Alibaba or Tencent. They're both seen as juggernauts in the space and they can direct traffic to you. So why not?
I think just now we were talking about Meituan Dianping entering into the ride-hailing space. And the backstory I heard is that both Wang Xing and Chen Wei were buddies before this happened. I'm very curious to understand what was the rationale to actually enter into the ride-hailing space. I mean, you spent 2 hours with him. He probably talked a little bit about that, right?
Okay, why don't you tell me the backstory first? I'm quite curious.
I was told that they were both buddies, as in they actually share best practices, how to be an internet giant. There's Meituan Dianping was evolving, and then Didi was evolving, and then suddenly there was just Meituan Dianping just went into ride hailing, and then they just went from friends to enemies literally overnight. And this seems to be the common theme of Chinese internet companies. It's almost like saying, if you were to think of the equivalent, would be something along the ways like what happened to Steve Jobs and Eric Schmidt when Google went to develop Android after the iPhone came out. So it's that kind of competition. Backstory aside, right? Why would they want to go into ride-hailing? Is it because they already aggregated so much services in terms of food delivery, in terms of deals, in terms of restaurants, and they felt that maybe the next part is transportation?
Yeah, so you mentioned me speaking to Wang Xing, and that definitely was one of the questions I asked him. And, if you hear him talk, you can understand the rationale why. So Meituan's biggest asset is its large pool of more than 300 million users in China. And I believe that's second to Alibaba. So Alibaba's Taobao has more users, but no other, 2C company that sells services or goods has that many number of users. So what can you do with so many users? How do you tap their potential? And one way is to cross-sell your services across your platform. So right now, Meituan has what they call high-frequency services. So high-frequency services would be things that you would use the app for on a daily or maybe weekly basis. So I would order food delivery with Meituan, for example. And that's a high-frequency service because I'm constantly going back to use it. But at the same time, because I have the Meituan app downloaded and on my cell phone, if I were looking for a tattoo parlor, for example, let's say I wanted to get a cool tattoo on my arm, I would also refer back to Meituan. So it's using high-frequency services to engage and hook in the consumer, then actually cross-selling other lower frequency services like travel bookings or vouchers to a tattoo parlor that actually, it's one way for Meituan to monetize its customers. So if you think about it that way, ride hailing is not a very far-fetched idea because the consumers already use your app to buy vouchers to a restaurant. Consumers already use your app to get food delivery for lunch when they're at work. So why can't they just use that same app to do ride hailing? When they started rolling out the service, I understood even more why it was a good idea. Because in China, when someone asks me out or I'm going out with friends, the first thing I do is we look for a place. And we typically go on Meituan to look for a restaurant to go to. And then you send the link to the restaurant over to your friend over WeChat, for example. And when your friend clicks on that link, it immediately opens up a page to the restaurant telling you former user reviews, what are the recommended dishes that you should try at the restaurant. And then now they also have a location map telling you where the restaurant is. And now if you click on that location map, there is an option to call a car to the restaurant from wherever you are. So it's actually quite smart because when I look at the restaurant, I always click on the location map to get directions to it. So now it's just a simple next step, another additional step to get a car to send me to the restaurant. So it makes a lot of sense.
So why haven't we seen the reverse where Didi should also do what Meituan Dianping is doing too?
I think the thing is Meituan has, I believe, more than 1.3 billion real life user reviews to these merchants. And those reviews, have not been accumulated overnight. It's taken a long process of about 10 years for the company, originally Dianping, to be accumulating all these real life reviews. And that is an asset that Didi cannot replicate, at least not very quickly.
I'm probably curious to know, where do you see Meituan Dianping's evolution in China will be in the next 1-2 years? I mean, would they focus on international expansion? Because I know that they are following where Tencent is going and they're starting to have activity in Indonesia. So, or they will focus much more deeper into services within China itself.
Yeah, I mean, it's a very interesting question because, domestic expansion, the domestic market is still growing. And the domestic consumption market especially is still kind of in its early stages of growth. There's a lot of potential in China that they don't really have to go overseas. So I did ask Wang Xing this question. I asked him, what are your plans to go international? And he said that they do have aspirations for the global market, but because their business is really mainly catering to local merchants, they're in no hurry to expand outside of China. His thinking is also they see a huge room for growth in China. Why stretch yourself to go overseas so quickly when you can still tap the growth here? That said, he has two ways that he's thinking of expanding internationally. So the first way is to cater to Chinese consumers who are traveling overseas, for example. So, Chinese consumers going to Thailand, if you open Meituan Dianping in Thailand, you would see very similar things that you would see in China. So you would see recommended merchants, you might see vouchers, and it's not just Thailand. In the US, for example, that would happen too, and all these other countries that are hotbeds for Chinese tourists. And as more Chinese get wealthier and more of them travel outside of China, I think Meituan will do pretty well expanding in that area, as opposed to opening a Meituan Dianping catering to Thai locals, for example, or American locals, because that's really actually not their niche. And the second thing that he said they're doing to expand overseas is what you mentioned earlier. So they're going overseas through investments. So they recently invested in Gojek, which is one of the largest internet platforms in Indonesia. They do, among other things, like bike hailing and stuff like that. And they also invested in India, in Swiggy, which is a food delivery platform. Yeah, so long story short, Meituan Dianping has global aspirations, but because the domestic market is so huge, they'll focus on China first and then start with Chinese companies traveling abroad when they expand overseas.
Pretty similar to the other strategies like what Tencent and Alibaba is doing in the region by investing, and instead of trying to target the global audience, they target the Chinese who are going to these markets like Southeast Asia. Is it just because they think that it's hard to get the users outside China and stay with their base, which I find it pretty interesting, but also at the same time very ironic, right? Because they are unable to customize or localize their service for a local market.
I don't know if they need to, though. I mean, I beg to differ on that point, because I feel like the Chinese consumer market is big enough. It's a market of 1.3 billion customers. And every year they're seeing their incomes growing because of economic growth. So when you have such a huge consumer market to cater to, why would you stretch yourself or go into another area? I mean, I'm sure that can come maybe a couple years down the road, when you feel like the Chinese consumer market growth has started to stagnate or slow down. But at this point, when people are looking to spend, they're earning more, they're looking for a better quality of life, there's a lot the Chinese companies can do to just cater to that. Why give up that niche or that market to another Chinese company to do so?
Yeah, I probably think so. I mean, there's a very interesting data point, right? Only 10% of the Chinese population actually have passports that allow them to travel internationally. Can you imagine if you just increase by another 10%? You will make traveling, and especially in those international markets, it will give them so much opportunity to grow as well.
Exactly. And if you were a Chinese technology company right now or a mobile app company, you have a base of maybe 800 million people in China who have smartphones and are logging onto the internet using smartphones. And they're doing everything on their smartphone, everything from mobile payments to online shopping to food delivery, right? So you have this base that's still growing rapidly. So it makes sense that these companies want to kind of stay home or keep their focus at home.
Yeah, I think this will be a story that we'll continue to monitor. I think it has been a very exciting year for all of us who's been watching all the internet activity that's going on in China. But in closing, Lisa, I would like to ask you two questions, and definitely I would love you to be back. The first question for me is, can you recommend me a book, movie, podcast, or anything else that has recently impacted your personal or work life?
So, I mean, I would say if your audience is looking for something to read, I would actually, a little bit shamelessly, recommend the Wall Street Journal's series of stories last year that we wrote about China as a surveillance state. It was a big team of us all working together, working long hours and, traveling to small villages and getting doors slammed in our face constantly. We worked over a couple of months on a series of stories on how China uses all the different technologies to keep its citizens in check in places such as Xinjiang, which is one of China's most restive regions. I had a colleague who wrote about how WeChat was monitored and sometimes used to silence dissent. And personally, I wrote a couple of stories as well on how Alibaba and Tencent they have fewer checks and balances when the police ask them for consumer information than in the US or in other parts of the world. And of course, the lead story to that is how face recognition started being used as, a tool by the police to catch criminals and stuff. And this was in, I think, end June last year. And right now we're seeing, petty criminals getting caught at Zhang Xueyong, which is a very famous Hong Kong celebrity. We're seeing people getting caught at celebrity concerts. So Zhang Xueyong's recent concerts have been an example of how they're using face recognition technology to catch criminals.
Wow.
Have their face scanned and run against a database of like petty criminals or wanted lists from the police. And if you turn up on their database, then they take you away. I'm not sure if you saw that.
Yeah, I beg to differ on that. I think it's okay to use face recognition to catch criminals. But I guess it's just that how the technology is used is another question. So how do my audience find you then?
Sure. They can find me through my email. So lisa.lin@wsj.com. I'm on Twitter and my handle is @Liz_in_Shanghai. So those are probably the best ways that they can get in touch with me.
And you can just Google my name, Bernard Leong, and you'll probably find me at Twitter, my website, and everywhere else. You can find us on iTunes, Stitcher, SoundCloud, Acast. And of course, please give me your 5-star ratings on iTunes or recommend us with a star on Overcast, Pocket Cast, and everywhere else. So once again, Lisa, thank you for coming on the show.
No problem. Thanks for having me.